Very strong performance coming through from the markets over the past 4 sessions, and people are wondering at this stage whether or not things are going to be slowing down. What's your outlook for market activity?
Well, we tend to take a more longer-term view. We expect the year to be positive. We expect strong performance this year. We're coming from a place where confidence has been fragile, but from what we've seen from the end of last year with AMCON becoming operational, that has restored a lot of confidence. It's been led, of course, by the banking sector, so that has sort of provided a catalyst. If you see what happened last year, a lot of investors withheld major investment decisions and trying to gauge, what direction the market was going to take. A lot of that performance came in the first quarter, and in the subsequent quarters, you had quite a lot of volatility. But from what we've seen and from the beginning of the year, with the market up about 12%, I think there's a lot of confidence. There would still be some volatility. We should expect that, especially depending on what happens on the political scene. But largely, I think with the primaries over, there's a bit more optimism that things should go as planned.
If you're an investor looking to sidestep some of that volatility, though, what are some of the counters you've got your eye on?
Well, I think if you're going to play in the equity market, what you have to do is to maybe take a sectorial view and position. What we've seen in the last couple of years is that some sectors tend to be more resilient and less volatile than others. So for instance, if you look at the brewery sector, that tends to be a bit resilient and sometimes even counter-cyclical. So if you're looking to stem volatility, food and beverage is also another good sector. So depending on what sector you want to be, but in a recovery, you tend to find that the banks tend to outperform as well. So that if you don't want to lag behind the index, then you might, you have to take, good positions in some of the banks. So definitely that's what we tend to see. So food and beverage, breweries, conglomerates afterwards.
Let's take a look at the 2 major breweries. We've got Guinness having seen an infrastructure build and an aggressive ramp up on the marketing side as well. Having said that, we've got Nigerian Brewries looking at Heineken possibly bringing 5 acquisitions that it's recently made into its stable as well. So the whole playing field might well change pretty easily moving forward. How are you viewing those 2 stacked up against each other?
I think it's very interesting. What we've seen is that, they're both big multinationals. They've been invested in Nigeria for a very long time. And I think that the mood is that Nigeria is in a growth phase. They understand the political terrain now, but I think they've decided to stem and make massive investment drives into the country. They see a young population, growing income as well, and so the growth prospects has been quite encouraging. Nigerian Brewries, of course, is a dominant player, big marketing distribution outlets, very, very good with its logistics as well. And with the back of the acquisition they've made, I'm sure Guinness is watching very, very closely, and probably going back to the drawing board and would ensure that they try to counter that move so that they don't lose out completely, because with the acquisition of those 5 brewing plants, that puts Nigerian Brewries in a very, very strong stead.
Well, you've got players like that really leveraging off the consumer space in Nigeria right now. You've got those who aren't getting it as right, and insurance players fall within that ambit. Let's take a look at your view on that space right now, because it seems that perception is still the issue, and many viewing this sector as not enough reform having taken place thus far to to actually warrant any investment within this space.
Yes, the insurance sector underperformed, especially if you look at it vis-a-vis the other sectors. I think what it is, first of all, there's a perception in Nigeria about insurance. Most people do not see the need to take out insurance policy or as a risk mitigating instrument. But what we've seen is that laws are now coming into place. If you look at the Pension Reform Act, it's compulsory for employers with 5 or more employees to take out group life insurance. in their complying with that law. But generally speaking, you have a few strong players that have done well, but the sector as a whole has been a bit disappointing from an investment point of view. I think if you look at what has happened in the regulatory space, the CBN has been very, very proactive, and I mean their intervention was very aggressive. That focused a lot of attention on what was being done, and whether it's political and international attention. But largely that has been done right. The Securities and Exchange as well, has been aggressive in trying to ensure that they clean out in the sectors, focus on players, and ensure that they are actually playing to the rules. Then the insurance have been left with little or no coverage, so to speak, as those two jostle. And also, of course, what has been happening on the Nigerian Stock Exchange too has also focused attention on all those sort of reforms. So I think what has been happening is that the reforms being seen in the insurance space is not seen as aggressive, and is not, and thereby investors' confidence is not where it should be with regards to players in that sector.